Hey guys, welcome to the Crowdfunding Lawyers Live, where we're actually talking to an amazing lady here, Ilonka Nobles, who has run a broker dealer for 20 plus years, compliance, blah, 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 blah. I'll let her introduce her way more. But while we're just waiting a little bit, I have some stupid jokes for you. Ilonka, you'll appreciate these. After I spoke to my financial advisor, I slept like a baby. Every hour I woke up and cried. I'm not saying my financial advisor is bad at her job, but when I went to her office and asked her to check my balance, she tried to push me over. That's like a horrible dad joke.
Yeah.
The pessimist sees the glass half empty. The optimist sees it half full. The financial advisor just asks for whiskey. That I understand.
Mm-hmm.
Your financial advisor is absolutely an expert. He will know tomorrow why the things he predicted yesterday didn't happen today.
Very good.
I love it. So, yeah, the relationship, I've known Ilonka for now, God knows how long. It's been a little while. Rough guess, how much in deals do you think that we've helped out together over the years?
50 for sure.
At least 50 million, probably
Oh,
quite a bit more.
I thought you meant number of offerings.
50 offerings, that makes sense. Probably 100 to 200 million,
For sure.
if not way more than that.
Yeah.
So the lady knows what she's talking about. But that being said, why don't you introduce yourself?
Okay. I'm Ilonka Nobles, president of Nobles and Richards broker dealer. And I have been in the securities industry since 1996, predominantly working direct with single issuers who need a financial solution to raise money. In some cases, they have through with working with me, they have got their own broker dealer direct with FINRA. In 2008, I formed my own broker dealer so that they didn't have to go through the FINRA process to get approval, and was allowed to get a miniature broker dealer franchise under Nobles and Richards. And working with you, Nate, we provide the two basic sides rails to keep the securities issuers from going off the rails by being in compliance. On the you've got the securities law side, I've got the securities compliance side, and both of those pieces are very important for raising capital.
Literally herding cats.
Mm-hmm.
I get to say no, 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 and you get to say, here's your lane, stick to it. It's definitely not an easy thing to undertake. So,
but the difference with working with you, unlike a lot of securities attorneys, you don't just say no. You listen and you hear what it is they're trying to accomplish, and you together we're trying to hear what they need and find the ways, because they don't know how to ask for what they want sometimes because they don't know what's possible.
I honestly, I think you nailed it. And right back at you, a lot of the financial institutions, a lot of the broker dealers, you try to custody with Charles Schwab, they just say no, not what does it take to make it happen. So it's, when you're working with the private issuers, it's one of the most important things to let's figure this out.
That's right. You need to know how they can get where they need to be.
Appreciate it. So anybody that's on here, please, any questions that you got, throw them in chat. We're here to answer anything that comes up. If you're already raising capital, there's those best practices and those keep me out of trouble, please. I know that Ilonka not only does consultations on setting up broker dealers, she has her own broker dealer, as well as just counsels or consults with private issuers on how to not get yourself in trouble. It very much, we go hand in hand. So with that, we should just dig in.
Okay.
So, a lot of people don't know if a broker dealer is actually necessary. And I got to tell you, you're a complete pain in the butt. All the broker dealers are a pain in the butt, but a necessary evil, kind of like attorneys, just a necessary evil. When should you actually need or register or actually call a broker dealer?
It's really the first and more important reason why a securities issuer would want to call a broker dealer is so that they can pay commission to salespeople, because you cannot give sales-based compensation to anybody who's helping you. A securities issuer, as you know, and your clients know, you can raise money direct on your own, saying, here's my offering, would you like to join me? But the manager can only do so much. And if he has a staff of salespeople and that's all they're doing, they have to be registered. And alternatively, even if they were only taking a salary, which again, if their primary duty is selling, they need to be registered. But if, let's say, they are the accountant or your investor relations guys, commissions motivate sales. And that's how you really get the traction in the money raised to help you develop your business plan. And then you need the broker dealer.
Makes sense. Let me throw out something that is actually new coming down the pipeline. If you are a hedge fund, you're trading securities, and you've got $50 million that you are managing, assets under management, now the SEC is coming down with rules that you are acting as a dealer because you're actively trading securities as a primary part of your business. So that's actually new news. It really hasn't been out there too much, but it has absolutely been approved by committee. These rules are coming down the pipeline. Just something else that everybody needs to be aware of. We got a question from Josh of, if I'm selling partial interests via hypothecation, I'm thinking we're breaking up some loans and selling them to investors, do I need to register with the SEC? The answer is no, unless. How does, what comes to mind when you hear that question?
Well, I guess I would need more understanding about the hypothecation strategy. If you want to take that one, Nate.
Well, sounds good. If you're selling off interests in a private note, in a company, in a fund, doesn't really matter. It ends up being a security, and registering with the SEC, it's a massive pain, expensive, a big process. You want to avoid that at all costs. But there are security regulation, registration exemptions. I'm sure you've heard of Regulation D. That's an exemption that says you don't need to register with the SEC. Do you need to get with a broker dealer? That's really if you're paying somebody to help you raise the capital. But let's be honest, if you get big enough that you're hiring guys to raise capital, or you're in the position that you just want to not deal with raising the capital, you want to hire people that can actually do it, that's really when the broker dealers come into play as well. So, and along those lines, let's talk about like an issuer that just says, I want to raise capital, but I don't want to raise capital. I want to hire people to raise capital. And I know the very classic things that really comes to people's mind is, can I just call a broker dealer and let them raise the capital? Which I know is a total misconception of what people think. I wanted you to really respond to that because we get that question all the time.
Yes, I think in the traditional Wall Street movies, you see that there's a sponsor that has whatever their widget is that they want to fund and they need the investment banking side of it. And there's a perception that if the deal is good enough or quality enough, interesting enough, that a broker dealer will say, yes, we love it. We're going to buy the whole thing out and we'll go get our money and we'll just send you a check. But that's not realistic. It doesn't, besides the fact that you'd have to be pretty significant for a Wall Street type firm to clamor for that opportunity. The reality is you have to build the business plan, the distribution plan. Who are we going to target? Who are we going to raise the money from? Is it going to be from retail, mom and pop check writers giving you $50,000 and $100,000 at a time? Or do we market it to other financial firms, the independent broker-dealer channel, registered investment advisors? Do we target family offices? How do we get in front of the venture capital groups, private equity? There's just a lot of questions because each one of those channels have different needs of structure and costs associated to getting out and getting into those circles. So there's a lot of prep work that has to go into the planning of the money raise. It's not just put a PPM together or private placement memorandum and then call the broker dealer and then wait for the money to arrive.
And I really appreciate what you're saying, because a lot of people have this preconceived notion that, my God, it's super easy, and it's not. But I'm hoping, we're getting quite a few people in here. So let me just throw this out, because I always throw this out. If you want more information from Ilonka, we've got a brochure that just kind of explains the process a little bit more. So if you want to find out more about this, here's a QR code. We'll also drop the link in chat. Go check it out. There's also a bunch of securities, regulatory process, and charts that I've thrown in there as well. So just follow the QR code, follow the link in the chat, and there's more information for you. Along the lines that we were just talking about, in terms of people haven't really heard this word, wholesalers. How does a wholesaler come into play to push your investment to kind of the larger investment broker-dealer communities or RIAs or the family offices? Could you talk a little bit about that?
Yes. So if you are going to reach out to the rest of the financial committee, besides, you have to understand that it's a very, very crowded market. You have to somehow get the time to get in front of the decision makers. And they must be looking at, certainly 100 deals a month are being pitched to them. So a wholesaler will understand what it is that you have to offer, may give advice as to where the target market might be, whether it's more geared toward a broker-dealer community or a registered investment advisor community. And then they will know how to speak the language, to hit the hot points, to get the attention, to get you the appointment, to get the interview, to get consideration.
Okay. If I'm calling up broker dealers, do they have wholesalers, or do you expect to actually have to find your own?
It's a mix. Some have wholesalers and they will tell you, yes, we have a team of wholesalers that have relationships and can go out there and market your deal. The flip side of that is they're telling everybody else the same thing. So if they have a deck of 52 cards of sponsors that they're going to go market, how can you be assured that you're going to get enough focus and attention to where you're the ace that they're showing, not just another deck in the card?
Okay. And so that's where it does come into play. Cards, decks. Are we going to Vegas? Let's go to Vegas.
Actually, speaking of that, you've got making money on your t-shirt. You want to talk about that?
Yeah, I love this. So I'm always making t-shirts for our clients. So this was my making money moves. But let me show off our recent one. I get proud of these things. We make them every about quarter and actually send it to our clients. So here's the hustle till your haters ask if you're hiring. Just kind of goofy things that we like to do for people. So I appreciate you asking. So
Yeah.
All right. If there's a difference between the wholesalers and if you're hiring somebody that's specific to raise capital just for you, actually banging on the phones or talking to investors, that's not a wholesaler. That's a sales rep. How does that kind of work? And if I was finding somebody that I want to sell the investment, like what's the process of working with a broker dealer?
So if you wanted to hire a broker dealer, which is one of the services that we have, where we can give you a dedicated channel where the salespeople will be licensed under us, but they'll be working specifically for you. You can think of it like a franchise operation. There's certain, regulatory structure and things that have to be in place that are uniform across all the firms. But then you can be like white label in your, XYZ company, securities offered to Nobles and Richards, and those individuals can be focused to only selling for you. That allows for your money spent only on your salespeople's efforts.
Okay. So, and just so that we're clear, and we should back up a couple of steps. What's a broker dealer? Like just at a very basic level.
There's a lot of terms out there for it, but investment bank is one big generic term, but it's a registered, highly regulated entity that has licensed people. The company has to be licensed. There's regular ongoing examinations by regulators, but basically it's the channel for you to access private capital from investors, whether it's high net worth individuals or, even private equity and institutional money, where you're talking to maybe pension plans that are looking to allocate a certain portion of the money that they manage to a certain asset class, and you could maybe fit in there. But all of this requires the registered entity in between the sponsor and the money to make sure that everything falls in line with the securities laws.
And so I want to be really clear for everybody that is listening. If you're trying to raise money for your business, or if you're trying to capitalize your fund and you're actually doing all the sales and all the work yourself, you don't need a broker dealer. There is what's called the issuer exemption, that you're working in the business, you're not getting paid to raise capital, you're managing it long term. There's a certain exemption that you don't need a broker dealer. But this is really, we're talking about you are doing investments on an ongoing basis, you're hiring a team, you're trying to capitalize your fund or business without your efforts, but hiring other people such as broker dealers to go out there and raise capital. These are the times that you need broker dealers, and they're regulated by a big monster called FINRA, who are, our best friends nonstop at all times. FINRA is different from the SEC. SEC is the government. FINRA is the mean stepmom that can tell everybody what to do. And well, I'm going to say that instead of Ilonka, because she has to play nice.
That's okay. And actually, it used to only be the Securities and Exchange Commission, and each state having their own securities division for regulating what happened within their state. But in the olden days, the National Association of Securities Dealers was formed to say, by the members or by the investment banking firms, to say, hey, SEC, if we build a club and we regulate ourselves and we only let members in that follow your rules, will you let us be self-regulatory? And the SEC said, that sounds like a good idea, but then we're going to watch you. And then in probably 2008 or so, there was a merge from the NYSE, the New York Stock Exchange Regulation Division, and the National Association of Securities Dealers, and they formed the big monster you're talking about, the Financial Industry Regulatory Authority. And so it is, I think, one of the largest regulatory authorities, certainly in the securities industry in the world. And yes, they're supposed to be the watchdog so that the SEC can just make sure they're doing their job, and then they come and make sure we're doing our job.
Makes sense. We've got a couple of questions that have popped up. So, just so that nobody feels left behind, maybe you have some opinions. I definitely do. Secondary markets for Regulation A companies, and generally those are kind of the private or secondary stock exchanges that absolutely requires a broker-dealer. Do you have anything to say about those secondary markets?
You're talking about the actual conducting of the Reg A raise and
Not the Reg A
mini
raise.
IPO?
We have a lot of interest in, they're free trading shares. I sell out my Reg A. Well, now my investors, they want to sell, they want to trade. And now there's more and more broker dealers and platforms that are opening up secondary markets to allow the investors to sell. Really doesn't even exist in the Reg D world because there's a lack of information, but they are absolutely coming along more and more with the Regulation A markets.
Are you talking about the ATSs that are now becoming more popular?
The
alternative trading, or the alternative
trading systems.
Yes.
Give or take.
Yeah. That I have yet to see the tipping point that makes that as effective as it promises to be. But yes, more people are trying to see, create an environment where there's more of a democratization of the opportunities for investors to get in the private type placements.
And now you're talking about my love, crowdfunding.
Yes.
So, but let me just throw out for SoCal Buff, one of the best ATS systems that I really like. They're over at Rialto, a broker dealer that really focuses on these secondary trading platforms. So definitely go check those out if you're interested. Another question we got from BK: to claim to be an accredited investors, they do allow you to say, even if you're not a millionaire, even if you're not making hundreds of $1,000s a year, as long as you have certain FINRA licenses. Series 7, is it 62? I thought it was like
it's supposed to be 65. Yeah, you're right.
And 82, isn't that the investment banking license?
No, that's the investment banking license is a 79. The 82 is a private stock license.
Got it. BK's question was really, well, what if I have my real estate license? Yeah, and I'm sorry, BK, it doesn't apply. It's only these very select, specialized FINRA licenses. I got to be honest, I was thinking, hey, it should be CPAs, it should be attorneys, but it's not. It is just those few licenses, and nobody else is included. And
to be more specific, the 65 is actually not even a FINRA license. It's a registered investment advisor license. And I recently read something that FINRA is trying to open up more definitions of accredited investor. And I've heard talk about an exam that somebody can sit for to, I guess, if you pass it, you can be qualified as an accredited investor.
So almost like it's a specific license to prove that you know what you're talking about to be an accredited investor, but really serves no other purpose.
Pretty much, yeah. Yeah.
So we've got a great question from my good old friend John. In conjunction with FINRA regulated platforms, and we're specifically talking about crowdfunding funding portals, are we restricted to one offering portal per CF offering? And John, before Ilonka answers that, I always throw this up. If you do want to get to know what Ilonka does or need her help more, definitely check out this QR code. It's to download some of her information. Go to the website that is linked here. And only because we have so many people show up, leave, show up, leave. I do this a few times.
Thank you, Nate.
You got it. Okay, so are we restricted to one offering portal for doing CF deals?
Yes, and the core basis of the regulation crowdfunding or Reg CF option for securities issuers is to really lower the restrictions that are placed on raising money for securities and allow for more people to participate. But the condition to do that is that it has to be in one location. All the communication happens there. All the sales happens there. There's no licensed individuals pushing or selling on a commission basis, trying to promote your offering. I was trying to think of a good analogy because I was talking about this to somebody recently. And I was saying, it's kind of like a boxing ring. Everybody has to get in the ring and that's where it happens. But I don't think boxing is the right analogy. So I'm going to come up with another one. But, you know, it's more like a town square, I suppose. You want the...
I'm thinking back. How about a festival that everybody shows up, but they have to be at the festival to enjoy the music? How about that as an analogy?
Well, but the thing is, one key part is the laws really wanted the crowd to weigh in. So if the one person is asking the sponsor who's at the town square, hey, how about, tell me what you've been doing. Well, there might be a guy over here with tomatoes and he wants to say, no, this guy would, and you want to be able to see the complaints, the problems and work it all out in an open forum. And so that's why the SEC requires it all happens in that one location. You can't have a separate one going on for that same offering. Now, you are entitled to raise money in a rolling 12-month period up to $5 million. And I guess in theory, it sounds like an awful lot of work, though. You could have $1 million Reg CF deals going on by one sponsor if they were unrelated to each other.
It is in the aggregate is the $5 million. So I absolutely agree with that. However, something that we're helping with and seeing more and more of is Reg Ds running alongside of Reg CF. And in those cases, you do have smaller investments and investors coming into the CF. So you do have the opportunity to do multiple CFs during the year, just allowing you to be able to accept way more non-accredited investors. All of a sudden, the accredited only goes out the window. The 35 non-accredited goes out the window. That just opens up new possibilities and probabilities. Basic question. I'm going to work with a broker dealer. Does my PE fund have to be registered? As a 506c, there's no registration for a 506c offering. However, if you're going to work with the broker dealer, Ilonka, please talk all about outside business activities and selling away, approvals of securities transactions, the fund compliance stuff that is only you to talk about.
Okay, so if you're going, if you're going to work at a broker dealer and you have a PE fund, I didn't catch that. Yes, that's going to be a very tricky spot that your broker dealer is going to be in. You're going to want some flexibility, because that broker dealer is going to be responsible for your raise or your PE fund, whether or not it's going through their firm. If you're not letting your broker dealer basically run the program through the broker dealer, they're still on the hook for it. So to Nate's point, that's what's considered a private securities transaction, and also more casually known as a selling away transaction. And so as far as the registration, it isn't a registration, but it has to be approved by the broker dealer. They will have to record all the activity on their firm and supervise you. And it doesn't really matter if it's a 506C or B, except there is a difference between a 506C's marketing material being sold through a broker dealer versus being sold without a broker dealer under the issuer's exemption. The issuer is allowed to make certain representations that a broker dealer's offering is not allowed to make, and it boils down to projections. You can talk about what you can have metrics of what you project your, let's say, your rent growth might be, or the potential sales price of a property that you hope to achieve in order to sell it. But you cannot talk about what an investor's $100,000 investment could return to them. So that is a distinction in the marketing material if you're using a broker dealer versus not using a broker dealer.
And so the way that I've always kind of dealt with that is you can have this range of assumptions, but at the end of the day, the investors have to run this like internal computation of, okay, well, if the market doubles in value, if the rents go up 50%, what does my investment look like? Because there's always different terms dealing with that. So building that box is more of what we see happening, rather than saying you're going to get a 20% IRR.
That's right.
Example.
That's right.
So we've got a question about 147 intrastate offerings. It doesn't seem like that exemption is utilized very often, but I'm curious, when or why or how do people make use of the intrastate exemptions? Or it's not even an intrastate exemption, you're dealing with the state law.
You're only dealing with your state's securities laws, and you usually don't see people resort to that because that can be its own spider web, and it's just easier to do a Reg D federal offering, file the Form D with the SEC, and just sell within your state. That's fine. It just from practical purposes, it's just easier, in my opinion. Nate, you might.
Yep. Yeah, let me chime in on that. So you have different Reg D rules, and you have Regulation D Rule 504 that you can raise up to $10 million. However, you still have to abide by state laws. Intrastate offerings actually doesn't matter what the SEC thinks. You have to deal with the state laws. And the state laws can be complex. It can be a registration process, like registering with the SEC. There can be way more work and way more cost to do that at a state level than trying to meet the terms of the Regulation D 506B or the Reg D 506C, which it is above state law. State laws don't really apply. They can't have differing laws. Like, that rule supersedes all other states. So it actually makes it way simpler to launch your raise at a big discount compared to like going through a registration process. So that's the reason why, even though you have intrastate offerings or you have these Rule 504 offerings, you just don't see them happening all that often. So, all right. You know, if I am doing a bunch of deals, actually this we get asked all the time. I have a fund. I'm doing syndications. I'm buying real estate. I'm bringing together investors. Can I get paid to raise capital?
Not without a broker dealer.
Yay! Now, if you're hooked in with a broker dealer and I'm licensed, now can I receive a fee for raising capital?
If you are licensed and registered with a broker dealer and you are also raising capital, yes, you may get paid sales-based compensation for the capital raising part of it, but then it goes back to Stacy James's comment. The broker dealer is going to have to be okay with you doing a money raise either under their umbrella or away from them. But either way, if the minute you're licensed, the broker dealer has a duty and obligation to supervise definitely all your securities activities, but also your outside business activities. As strange as this may sound, if you are running a car wash while you are also raising money, they're responsible for approving, reviewing, and considering whether to approve your car wash outside business activity. So the standards, once you are registered, that will allow you to get sales-based compensation, is still very highly regulated. So, yeah.
And I think to drive the point home, the big answer is yes. You get licensed, you put your deal with the broker dealer, you can get paid to raise capital. But now that broker dealer is overseeing not just that offering, but all the different deals and businesses that you become involved with. Did I say that properly?
Yes, as a matter of fact. So when an individual does pass their tests and get associated with a broker dealer, they become their profile becomes a matter of public record, and all of your outside business activities, even all of your LLCs. It could just be your LLC holding company. It might be the LLC that you have your rental properties in. All your outside business activities become subject to public disclosure as well. So you become have to be very transparent and, I guess, exposed, for lack of a better word. You cannot have something over here because everything has to be disclosed, and it will become public information.
And I think that that's huge for two reasons. A, some people want to just remain anonymous. Well, you can't. Not only in the broker dealer world, but in the securities world, if you're raising money from investors, you have to be ready for some level of transparency. Not only the fact that you have to disclose certain things, but it's just good business practice to be transparent, to share with your investors, whether it's good what's going on, bad what's going on, otherwise. That transparency and that honesty honestly really helps you be successful in actually raising capital and accomplishing your goals.
That's correct. And
so
the SEC would not look favorably on somebody who did not disclose what they believe, and which, we understand would a prudent investor want to know about you before they give you their money.
Thank you so much. If you don't mind, can we talk about like a sample issuer? Hey, I'm coming to you. Have a home building business, an interior design business, and I'm just trying to take that to the next level. Well, and to do that, you need cash. You need investors.
That's right.
What do you start telling somebody?
Well, it's very interesting. I met with a group recently that they've been in business for more than 20 years. They've been very successful. They've bootstrapped their company and grown it to a multi-million dollar revenue per year company. But the only source of capital that they've really thought to reach for was bank money. And that with the interest rate situation right now, it's very difficult. And, in their case, they may choose that they want to have investor partners to see them go, take this company to the next level over the next 10, 20 years. Or they may want to seek out investor capital to retire their debt and get them to a certain point, and then get those investors out of the way, maybe debt offering or something, and then they can continue down the path. But yes, these things, it does take money to get money, because there is, just like the investigative process on who a company is, what have they done, what do their records and financials and track records show they could get to, where are all the moving parts, what are the comparisons, what is another company in their industry doing in their area. So there's a lot of investigation there. And then there's the effort to go find the money and convince others that they are worth participating with.
All right. So, and I love what you brought up. I mean, the bootstrapping and then bringing in capital. One thing that I love to help people with is if they've come to the table with a real estate rental portfolio that blah, 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 that they've been building like over a lifetime, by putting together a fund that's going to buy that pool, you're actually giving people the opportunity to cash out of their own rental portfolio, plus still be able to manage it, still be able to get fees, still be able to get profits from it. So I absolutely love when people show up and say, I've built this business and I don't want to lose it, but I want a little cash out. There's, of course, a lot more to it. But since you brought up the bootstrapping business, there's so many opportunities there.
Right. And, there's a term in our industry about OPM, and it's other people's money. And it's a good thing, because by pooling money together and people together and giving them an opportunity to participate in the growth in whatever mechanism is used, then it's a win-win for everybody. And probably the one thing that new...
I love when you just freeze up.
Uh-oh, I'm frozen. Can you hear me?
You're good now. Yeah.
Okay.
Yeah. Now you're rolling.
Okay, good. One thing that is probably the most key thing for a new entrant into this space to understand, like a company who has been bootstrapping and built it from their sweat equity, is that this is not like going to a bank, filling out an application and putting a lien on the property so that you can borrow money, because all the securities laws have to come into play, and there's a much higher risk to the people who are bringing the money. And so it is very different from accessing capital through traditional financing.
And so you have this dream, you've done your research, you figured stuff out. I always say that the next step is you call the attorney, you reach out to crowdfunding lawyers, and then we really help kind of design everything, put it all together, be able to start launching your capital raise. But side by side, if you're looking to work with a sales guy or wholesalers or somebody to raise capital, that's when we pull Ilonka in with the broker dealer. Now is when you start kind of doing your thing and due diligence. What does that look like?
It can take many different shapes, so to speak. It can be in the form of 1 to 3 to 5 people who are just going to get a basic license and start reaching out to contacts, maybe the sponsor's own network. It might be their own network that they've built on over time, and looking to fund the programs. And it's going to depend on how much money is needed also. Are you looking for $1 million raise, or is it a $20 million raise? So there's what we call retail brokers, which are the ones that are just going to raise money from $100,000 at a time from regular investors. Then there's a wholesaler type rep, or like what we mentioned earlier today, that is going to shop your product to the financial firms, speak the language, get to the right decision makers, get you the appointments, get you the interviews. And then there's the institutional type rep who's looking for the single check from the pension plan, the private equity firm, the venture capital firm, the angel investor. So there's different roles a licensed registered person can take depending on what might be the best starting out plan, and it might evolve into something else.
And you brought up a great point. There's kind of different treatment or different expectations if you're only raising $1 million versus you're trying to raise $30 million. Somebody that's trying to accomplish that, do you have different advice to like, hey, I'm just trying to do my one little small deal versus I want to do this big old fund?
I have seen, so all the sponsors are very proud of the work that they've done, and they're visionary and they see what's possible. But it doesn't always translate stepping out into this crowded field of people also just like you wanting to raise money. So I have always advocated, let's walk before we run. Let's do a sort of proof of concept, because the more track record that you can show in what you've done with investor capital, the easier it's going to be to get into the next one. So when the sponsor says, I have a plan for what I can do with $100 million. Okay, we'll get you there, but let's not start there, because people are going to look at you and say, what have you done? I'm not taking that kind of risk. So I would suggest taking the 100 million, and let's break it down into steps and stages. And to Nate's point, there's a lot of different securities exemptions that could be implemented to build out different parts of your plan to where it is more manageable and brings more likelihood of success.
So like an example that I like to use is we do a lot of Regulation A offerings that go through the SEC. You can raise up to $75 million, but we'll get a phone call from people saying, I want to do this. And my response is exactly that. Walk before you run. Have you thought about doing a smaller regulation crowdfunding or a Regulation D type offering, something that gets your feet under you? Make sure that you're successful with raising capital before you spend the time and spend the money to get one of those things actually launched. And it sounds like you're suggesting about the same thing.
That's right. That's right. Because the worst part is seeing, and we've both seen a lot of it, that when you undertake too big of a raise or bite off more than you can chew early on, besides the fact that how long it takes to get there and how expensive it is, it can really discourage you. And it will also, because it takes time and energy. I mean, it's not just outsourcing it to a broker dealer. You have to be involved in it. And this is going to be time and energy to some degree that is taken away from your core skill set, which is running your program, running your business. So it takes time to put all the pieces in place to where everything runs smoothly, and so that you don't get discouraged and you don't go broke along the way.
I think you bring up a great point, but I kind of explain it like an avalanche. You start small. It takes a lot of work to get things running, but if you do a good job, you implement the best practices with your investors, those are going to be your future investors as well, or they're going to recommend you as a good investment manager or sponsor or entrepreneur. That's where your investor base continues to grow and expand. So starting small doesn't mean you're going to end small.
That's right.
It is just that snowball effect of it grows and it grows and it grows.
Nate, I want to add something here that comes up all the time. Sponsors will shop firms, shop broker dealers, shop salespeople, and inevitably, there's people out there that's going to tell them what they want to hear,
Oh,
and they will overpromise and inevitably underdeliver. And I am working with some sponsors right now that have spent 3 to 5 years having been told, sure, pay us now. We're going to raise all your money for you. It's going to be in a 6-month period. Then you get 6 and 8 months in. Oh, well, we didn't anticipate this. So you need to pay us some more. We need to go to more events. We need to, spend $50,000 on this conference and $40,000 on this event. And we have to have due diligence meetings and invite more people. Keep throwing money at us and we will get you there, I promise. And I've got 2 firms right now that have been shuffled around in this way for 3 and 5 years. And they probably would have been better off if somebody early on would have said, no, you don't need to come out of the gate with a $50 million offering. No, you don't have to spend $1 million your first year to do this. Let's do it in stages. And, so I just wanted to warn everybody, don't just go with somebody because they're telling you what you want to hear. You really want to be pragmatic about it.
and there are so many scammers out there trying to sell that hope and dream. It is trust but verify.
Mm-hmm.
Do your research. Hey, I've accomplished all this stuff. Great. Prove it.
Yeah.
What deals did you work on?
Yeah.
Who can I talk to? The really important stuff, especially when they are asking for, hey, just pay me 25 grand to just get started. 50 grand. I've heard it all. Used to practice in Las Vegas. It's like you get these all the time, and it's like,
And make sure that the broker dealer that you're working with is willing to earn their big money, not charge it on the front end. Because some firms are charging, $40,000 and $50,000 a month, and it's going to take you, because those are salespeople, right? It's going to take you 6 or 8 months before you realize that money is gone. So you're going to want the broker dealer to have more investment in earning their money through the sales, not just from service fees.
I will say this though, broker dealers do charge some fees on the front end.
There has to be, yes. There has to be some level of fee on the front end, but yes, it's a delicate balance. There has to, there's time and effort involved in analysis and due diligence and setup, and that time does matter, but there is a balance.
And the same applies for lenders. Oh, I got this lender. He's going to fund this $1 million, $1 billion. Don't really care. He just wanted $50,000 to get started. There's actually some very legit lenders that will ask for $25,000 or $35,000 to pay for their expenses. Mm-hmm. But again, I'm talking about the Greystones of the world, the really huge banks still charge money up front. But John Smith from BFE, you really need to do your due diligence and ask for referrals and people that they've done deals with, and make sure that you're doing your research as well.
And a really reputable company like what you were talking about, they're not going to charge you that fee if they don't have some idea that they are interested and want to try to make it work. That fee is for actually doing due diligence and taking a peek in all the shadows to make sure that they're dealing with somebody that not only is reputable, but the program will actually work.
But they earn their fee when they deliver. There is just the cost of doing business on the front end. So Somebody says, I'm going to raise you $1 million. I just need $50,000 up front. That's a scam. 100% of the time, that's a scam.
That's right.
So we are coming up on the hour. Going to ask one more time. If anybody has any questions, throw them in. Otherwise, Ilonka is going to do a dance and sing us a song.
Oops, my camera froze.
I should have asked you to roll out here with your guitar.
That's right. There is a question here. Peter says, are there any states that have advantageous blue sky laws compared to Reg D? I'm going to say no.
It's really the same analysis. If you're having to deal with the intrastate, then you're dealing with the state laws. There's so many easier ways to accomplish it, and we'll do them sometimes. There's always a really good reason why we'll jump through those hoops, like having a, a self-executing exemption where maybe it is such a small raise that you don't have to register in the state. So it still makes sense, but it is truly a deal by deal type analysis. So please just make sure you're working with good counsel that has experience, that knows what they're doing.
So Stacy James says, reason I ask is because I want to expand across to investor networks that are more or less exclusive to a broker dealer. I can obviously add people to my GP that have strong networks.
Touchy question. So let me jump out there. If you're adding people to your GP just so that they can raise capital for you, it does not qualify for that issuer exemption. They have to have substantive duties besides and in addition to raising the capital. If they're only raising the capital, talk to Ilonka.
I think I didn't realize that that's what he was saying. Yes, there are ways in that, not to be disrespectful, but you can kind of game the system by making everybody a control person to rely on the issuer's exemption. But the SEC is on to that, and it is not ideal. I actually have an individual who's been wanting to join our firm who's been operating in that fashion, and it's just not ideal. So they have to kind of wind that stuff up before they're going to be able to join our firm, because they're not really a securities issuer. They're not really having any meaningful role in managing the program. They're just an unregistered salesperson.
Can be done, but it can be illegal. So as Ilonka has said, be careful. And let's be honest, if you're just trying to raise some capital and get paid, there's a way to do it. So just do it legally.
There's some finder rules in Texas, finder's exemption in Texas. We have yet to see it really work well for anybody, because if you're a securities issuer on a continuously seeking, to work with OPM, then the finder's exemption is not really the best way to go.
I found it downright worthless, but there is the finder's exemption that allows you to find people like Google, just getting paid per click, but it doesn't allow you to get out there, sell people, raise capital. It's a unique situation really unto itself.
Yeah.
Well, we're coming up on the hour. Ilonka, do you have any last words?
I don't think I got all my words in, but thank you so very much. It's always good to spend time with you, and thank you for the opportunity to speak on your Facebook
Whatever.
Live. Yes, wherever it's going.
And let me just reemphasize, if you're looking to work with a broker dealer, Ilonka is a wonderful person to work with as a person and as a compliance specialist. But at the end of the day, it doesn't matter. Work with an attorney that has experience, work with the securities consultants and broker dealers that have experience. Don't just jump out there and say, I'm going to figure this out on my own. way, way, way too much risk there.
As to Stacy James's last question on, do broker dealers prefer C or D if they're going to be responsible? It depends on who you talk to. Some firms only want to work on 506C that allow for general solicitation so that they don't break the prohibition rule. Other firms are afraid to work with the general solicitation because they're afraid that if one single non-accredited verified person comes through, that it blows the whole thing. So I'm agnostic because there's good and bad on both sides.
There you go, Stacy. It always depends. A very lawyerly answer.
Got it from you,
All right.
Nate.
You know what? We know what we're talking about, and the answer always depends.
Yeah. Thank you.
Thank you all for joining. See you again soon.
Bye.